Right. All right. Let's build up this audience here as best as we can. Thank you for tuning in today. All right. Let's get everything set. This is Harvey Burnett of Dunamis Insurance and Business Services. Thank you for taking the time to join me today. All right. Hold on a second here. Let me get everything straight. So we get our minimum number of interruptions. Glad that you have taken the time to join me today. Before we get started, let's go ahead and you know that you can type in your comments, your questions in the comment box. And questions. Let me turn the sound down. In the comment box, feel free to do that. We'll take questions as we go. Won't be out here long, but we'll be out here long enough to make sure that we answer your questions and make sure that we have a full show, or make sure that we get to the details of what you're asking about. Had to change glasses here for a minute because my eyesight has changed somewhat on me, and I've got certain pairs of glasses that I can see better out of than others, and this is actually a raggedy pair of glasses, but nevertheless they do the job. I'm sure those of you who wear glasses understand that and know what I mean. But thank you for joining us this morning. This is a important session for a number of different reasons. One of the reasons being that it is Small Business Saturday, and I wanted to do something special, as I try to do on an ongoing basis through Dunamis Insurance and Business Services. And we try to present information that maybe is not so prevalent and or so freely given. And I'll kind of go into that as we go. But just a little bit of history about myself and Dunamis. I'm not a novice at insurance and financial services by any means. I've done insurance and financial services for probably about 25 to 26 years now, maybe even longer than that. Probably a great deal, or what I would consider to be a lifetime. But nevertheless, at a certain point early on, I decided that if I'm going to work this hard in this field, that I was going to do that for myself, where I could actually build something that I was proud of, and actually accomplish something that that I would be happy to accomplish, and all of that. So I went into business probably around a little bit before 1996 or so. And so we set out after working for some of the major companies at that time, the Equitable, which was one of the companies, New York Life as well, which was another one, major companies. After seeing how people were treated as numbers and all of that, we decided to launch Dunamis Insurance and Business Services here in the Peoria, Illinois area. Now, at that time, when we started, there were other black-owned independent insurance agencies. Now, I want to set the record straight, because over a period of time, Dunamis has become the only standing black-owned, independently operated, and independently owned insurance firm in Central Illinois. Okay, life, health, and disability, working with the financial services types of insurance. in Central Illinois. Now, there's plenty of black agents, are really not enough. But there's black agents that work for State Farm, that work for Allstate, that work for various types of companies and different things. But none of them are independently owned and operated. None of them are considered to be insurance brokers, or some of those that are brokers are working for other organizations that are primarily owned by non-ethnic or non-black individuals. Now, there's no problem with that, but I wanted to point out the fact that over the 20 years or so, Dunamis has stood that test of time. And in the era of attrition, where companies close and all of that, we've managed to hang on. Now, we diversified our business model. I do quite a bit of other things. Some things I've done before in times past that, to whatever degree, we decide to do those things or not moving forward. I also pastor a church, which I'm proud to pastor. Any of the members of New Bethel Church of God in Christ, hello, good morning, God bless you real good. But nevertheless, we are, we move forward. Now, we move in Dunamis Insurance with a family-oriented focus. I've experienced it all. I've experienced the heights of wealth. I've experienced the depths of poverty. And so I plan from the base of my experience. I don't consider myself to be a salesperson, but I do consider myself to be one that will figure out how to provide a need, put together a strategy that will satisfy the need that is desired. So that's the basis of our planning. That's what we want to do at Dunamis. We want to establish a relationship and find ways to develop strategies that help individuals solve needs. So that's the whole basis of it. In fact, I was talking about strategies, some 20 years ago when people were just getting that language in their vocabulary. So far as insurance and financial services, we were kind of cutting edge on a lot of different things that's going on. We were doing viatical settlements when they were popular. We were also, which are called life settlements now. Back in the day, we were talking about reverse mortgages and seminars, which now you see reverse mortgages is very popular on TV and different things like that, where people are getting information. And still a lot of this is mysterious to certain segments of our community because those segments have been underserved and they're not getting information. And I'll go into the example that I was talking about regarding this. I had a particular gentleman that I had been talking to this some years ago, some 10, 15 years ago. But I have been talking to him about some financial and estate planning and different things. And one of the best things that you can do for your particular estate and for your family is to prepare a will. That's one of the best things that you can do. And in this particular case, I had spoken to this gentleman not only about a will, but about some other instruments of planning, such as a living trust and a family limited partnership and some other particular items. And he, had listened to me, but not really listened to me. And this particular day, I was delivering a policy to him, and I took the policy over. He had purchased probably about a $200,000 or $250,000 instrument of life insurance. And I was taking it to him, and I just mentioned it to him again. I said, hey, you may want to consider this estate planning combination that we've been talking about. And we may want to look at what a living trust may do for your particular plan and the way that you want things outlined with your family. And, he stopped right then. I guess it was enough conversations that he said, let me stop right now, because this afternoon, he said, I'm going to sign my will at my lawyer. And he had paid roughly at that particular time about $300 to $400 for this particular will. And he was, he called and he was able to get through to his lawyer right away. And he talked to him real briefly. He said, "Hey, I've been hearing about this particular concept, one that I had advised. I had advised him probably about 6 months prior. But he heard this particular attorney, or at least he talked with this particular attorney. And the attorney ended up telling him, you know what, that may be a good idea for you and your estate." And he said, "I'm going to give you some more information on that." He's right on the phone talking with him. And I'm standing there listening, kind of laughing in my spirit, in my heart. And, he's hung up the phone and he was kind of amazed. He said, "You know what? He told me that what you were saying is a good idea." And then I responded and I said, you were going in for $300. And granted, it may cost you more to do what you want to do, but you're going in for that $300. And if you had not known what I was telling you, you would have walked in, paid your $300 and walked out without ever being bothered, told, or anything else about this particular strategy or set of strategies that you need to also to undertake. Now, let that sink in for a minute. He was paying green dollars for support for his family. His family was cherished. He loved his family and wanted to make sure that his family arrangements were together, which I commend him for. But at the same time, he was going to pay the same green dollars that you have in your wallets, purse, pocketbook, as they say, right now. But he was going to walk out of there with less service. He was not going to have what he needed. Do I get paid? I'm an insurance agent. I'm not a lawyer. I don't get paid to perform legal services. In fact, it's illegal for anyone to practice law without a license. So his attorney stood to make the money off of the particular items and documents that I was talking about and the recommendations that I had given him. But his attorney was a MIA, missing in action. There was nothing that was going to be said by way of his attorney to him to help him get his estate together. And that really kind of reaffirmed me in this particular business. Now, that because that's important. Your dollars are just as important as anybody else's dollars. And it doesn't matter whether it comes from a household of $5,000 a year or a household of $500,000 a year, or, any place in between or anything more or less. Your money is just as important as everyone else's. And there's a few things that I learned when I was in banking, because I was a bank manager also for the former defunct corporation, Bank One. But nevertheless, a few things I learned about money. Number one, everybody has an interest in saving money. And everybody has an interest in maximizing or saving time as it relates to their money. And, the third thing, everybody has an interest in making it as convenient as possible to access their money. You don't want hold up in getting your money. You want it safe. You want to be quick and easy, and you want convenience. You don't want to have to drive across town, or drive to other cities just to get to an ATM to get $20. And so those are some cornerstones and things that you learn in retail banking that really kind of make the uniqueness of retail banks and make them successful or not. And it's the same thing with any financial endeavor. You want security, you want convenience, you want access. Insurance, certainly you want, like I said, security associated with protection. You want whatever insurance you purchase to meet the goal, to meet the need, and to do what it says it's going to do. The worst possible thing that you can experience is that when you've had insurance or you paid for insurance and then there's a claim and you can't use it for whatever reason. There's some excuse that you can't use it. And that's the worst possible scenario that you can come into. Real quickly, I'm going to put in our comments and we'll get into the rest of this seminar, but hopefully you're doing good here. Let's see if I can put up our website. For you to view. As I said, Dunamis Insurance and Business Services has been around for quite a number of years. I will copy and paste the link to our website in the comments section here. Let's see what we got going on. And you should be able to see or get a link to our website there. And if you go out to the website, you'll be able to see some of the features and different things that we offer. I have a nice little introductory video out there. I'm looking kind of stiff on that video because they say keep your head still, you know, and all that type of stuff. So so I'm really kind of rigid and stiff on that video, but nevertheless, I'm trying to do away with any unwanted, what they say, any unwanted motion and different things like that. So nevertheless, you go out to the website and you can see some of the areas of specialty and services that we offer. Now, one thing that I'm kind of updating because companies are changing so fast, and if you didn't know, this is the time or the date of change. We've got some online enrollments for various types of things. I've got some insurance available for international travelers, for students that travel out of the United States for school, or those coming out or in the United States for temporary work, employment, school, whatever the case is. We've got the ability to cover those type of needs as well. We've got a 24-hour online store. Now we're going to redeveloping that particular section. But like I said, things are changing so fast and companies are doing so many different things. It's kind of difficult to keep up with some of the changes, but nevertheless, we're able to serve your insurance and financial services needs, even in the health insurance industry. We have also, under the life insurance section, one of our companies that we're able to do an online quote that we're hoping by the first quarter of next year to be able to give you a full gambit of online quotes where you'll be able to log into the website, put your name, age, and all of that. And instead of having a tab where it says, you know, you fill out all this stuff and it says view your quote, and then you click it and then it says an agent will call you back. Instead of having that, you'll have a pure quote online that you'll be able to see exactly what your price ranges are on certain types of insurance. And one of the types of insurance that we'll talk about today is term insurance. But nevertheless, that's in the process of being updated on that website. So we're working on quite a bit of things and quite a few things as we are able to and get those functionalities up. And a lot of this stuff is not, believe me, when you're in business on your own and by yourself, as many of you are tuning in, know this stuff is not cheap. And in order to make your business work, is not inexpensive. And then me being not only the insurance provider, networking between companies and individuals, but also being an IT person, that takes a load. It takes quite a bit of time in order to set that type of stuff up too. So those are opportunities for those of you who have your small business thinking cap on. Those are opportunities that may be available for some of you to actually provide services for me as a small business owner. You see, love is a two-way street. Okay. And maybe this is a topic that I wanted at the end, but let me put this at the beginning because I think some of us miss the vision. Now, recently I had a client that was transferring from one job to another, and they had a retirement rollover. And on this particular rollover, they decided to do or go into an investment strategy through one of the trade brokers. And you can talk about, oh, good deals, zero trade, $0, all this type of stuff. Nothing wrong with all that. But there was one particular portion, and I'm always of the frame of mind that diversification is the foundation of any investment plan or strategy. You never put all of your eggs in just one basket. And let me get that over to you now. Very seldom, if ever, will Dunamis ask for everything you have in one lump sum. Now, it may be that you decide that this is the best thing for all of my money, and we'll discuss that. But very seldom will I just out of the bat or off hat recommend that all of your money or all of your investment dollars or whatever is just in one place. Now, we contrast that to insurance, and to some degree, thank God, in brokerage, I can deal with multiple companies, so I can kind of prevent those type of things from happening in insurance. But so far as financial, you've got to be careful of the one basket mentality, no matter how it's diversified within that basket. And this is another thing that could be kind of tricky. People say, well, I've opened up this this account through Ameritrade or whatever, Scott Trade or whatever, and I have diversity within that account. Okay, that's fine, but it's still in that same basket. And you're still experiencing, no matter how it's spread out there, you're still experiencing some tying together, whether it's the overall account, whether it's the brokerage house, the brokerage manager, or whatever the case is. So what I'm saying is diversify is really the best platform. Have some here, some there. Know what you're doing with your investment strategy. And this particular person, took all their money there. Well, as a part of sound investing, there are other considerations other than just, dollar amount rates of return. That's what I know we've been told to look at. And we think, okay, that's smart and savvy. That when we think of dollar amounts, we think of rates of return, we are being smart, we're being savvy, and that's what we're told. But these are the days of social responsibility in investing as well. In other words, there's a lot of things that'll give you a good dollar rate of return, but the dollars that you put into those investments is what we would consider socially irresponsible, because those dollars go to support wrong causes. And you've got to research some of the funds and some of the companies that you deal with to see, who are we supporting and what are we supporting with this? And so outside of the diversification model, which is number one in any investment strategy, you look at the social responsibility. Now we're going to a third rank. So that's the second rank. Now we're going to a third rank because now we're living in COVID-19 times, and your local economy dictates what services and what happens, locally. So here you are taking your dollars outside of your local community, and there's no consideration for what's going on in the local community. And I'll tell you this now. Commission dollars earned by Dunamis Insurance and Business Services in the Peoria area for over 20 years. We have a proven track record of reinvestment within this community. Proven through my church, New Bethel Church of God in Christ, back in 2002. We were the ones who put on the community's first back to school giveaway. The first one in this area, before Dream Center, before Riverside, before anybody else's church. We were doing that within our church community for a while. It was a particular business dealing that we were able to oversee, produced money. The money that I earned went into the church. The church was able to and decided, let's bless the community on a larger scale. And for 2 years, we had people down at the old St. Martin de Porres church. We served the community backpacks. We didn't give them no, what I want to say, the fake crayons, Crayolas. We didn't give them fake materials. We gave them good backpacks. We gave them, name brand pencils, pens. We didn't have a scale down. Some of the stuff that we gave out over those 2 years lasted those students a whole school year. Now you get stuff that lasts maybe 1 or 2 months, if that long. We gave out stuff that lasted students a whole school year. I remember one time one of the students came back, one of the parents came back and said, listen, we want you guys to keep on doing this because my child had paper to last the whole year. That money went through our agency, our firm, and it went right back into the streets and the community of Peoria, Illinois, at a time when people needed help. Bill money. Some folks thanked me for paying the bills, thanked us for paying the bills. Other folks didn't. But you know what? Bills were paid. This is way back in 2002. Okay? 2002 and 2003. When you have your money, you've got to think as a third tier. If I'm supporting these business, I'm looking at rates, I'm looking at dollars, I'm looking at my return, how secure it's going to be for me. But at the same time, I must deal with individuals locally, and that's just one thing. But individuals locally that's going to bless the community that I live in so that our community will be raised and will be better. I challenge anybody right now. Like I said, Dunamis, we don't ask for all of your retirement dollars. You got $500,000 million in retirement money, that's fine. We may look at a strategy where we'll recommend 100,000 of it, maybe 200,000 of it. Maybe less, maybe more. Depends upon what you want to do. And then we recommend something else for the other part because we are looking at diversity. But I guarantee you, because of the proven track record of over the last 20 plus years, that the money that we earn as a firm will go back into the community somehow and in some way. It happens. I've got proof of it. Peoria's gun exchange. Part of that was founded by money earned. You thought the churches coming together, the churches had paid for that a lot. And thank God for the churches back in 2009, 2010. Thank God for the churches that contributed to the gun exchange to combat crime and violence in the Peoria, Illinois area. We thank God for those churches because we had quite a few of us that stood together and worked on this. But the majority of that money did not come from the churches. Majority of that money came from earnings made through Dunamis Insurance and Business Services that went right back into the community to help get guns off the street. It was probably about $18,000 to $20,000 that came in. So that we paid out for different ones for the exchange at that particular time. And I would venture to say that at least about 10,000 of that was as a result of the work and the effort of Dunamis Insurance and Business Services, the clients that did business with us. The money that we earned, we reinvested that within the community. This is a fact. This is what Dunamis does. So anybody that's talking about their investment strategy, and you're not considering the impact of local business on the community in your strategy is bogus. Your strategy may not be good enough, because with a small amount of effort, a smaller effort, you may be able to impact a local small business and help that small business sustain this community better than you would have imagined, than you would have thought. And it's worth the consideration. At Dunamis Insurance and Business Services, that's our guarantee and that's our commitment. That money comes in and it goes right back into the community one way or another. And there's many different ways and many different things that we can look at after that. There's a lot of things, over 50 prayer vigils for families who have died and suffered from tragedies, murders within the community. We've been there and we stood there with them independently. That's before there was a PCAV and all of these other groups and organizations and these different things that the city is trying to do whatever to curb violence and all of that type of thing. Before that, drug market intervention, of which I was the chair, and different things like that. We stood, and though the funds that came in through sales of insurance, through sales of annuities, financial investments, those things went back into the community. So if there's ever a reason for you to stop and consider what Dunamis Insurance has available for you as an individual, and to help your financial plan and estate, that is a very good reason, because those dollars will eventually come back, and those dollars will impact something that's going on in our community. Some things you know, some things you never know, some things you're aware of, but one thing that we have a commitment to do, that we have proven, is that those dollars go back into the community. We've made and helped to make some businesses wealthy, in Peoria, simply because we were able to network and reach out, find opportunities, and come back and share that with individuals and businesses that we dealt with. There's some people now that have businesses, have positions in businesses, that when they came to us, they didn't start with those positions. We helped them develop, and that had nothing to do with it. Didn't pay us a dime. It didn't help us from anything. All we wanted to do was reinvest in the community. So Dunamis is a socially responsible and socially moral and socially relevant business that, dealing with us, whether it's the purchase of an individual life insurance, group life health, individual health insurance, disability plan, whatever, all of that means something, and all of that goes to the betterment of the community, And so those are facts. Those are things that have happened. So I had to go over some of the history of Dunamis, because, and you don't see us on billboards. Somebody said, well, how come you're not on billboards? Well, where would you rather the money to go? To some big advertising company, some big, advertiser with big stogie in his mouth, sitting up talking about, yeah, let me get that $2,000 a month for this billboard, or for whatever sign. Would you prefer that goes to that, or would you prefer that those dollars become or be available for the community, for some particular program? Because we supported programs as well outside of our own as a church, that people come and said, hey, we've got this going on, we need some help with this. Pastor Burnett, can you help us with this, or can you give us something toward making this particular program successful? You want your businesses to say yes. Help your businesses stay strong. Listen, this is vitally important in this time. You know why? Because in San Francisco, Right now, today, because of COVID-19, only 50% of the small businesses survive. 50% of them have closed due to COVID-19. 50% of the small businesses in San Francisco, California, right now today, have closed due to COVID-19. If you haven't looked, your food choices are getting smaller and smaller. The buffets, they're going away, or at least they are right now. It hurt me to my heart to see Golden Corral go, and I know people have various opinions on Golden Corral. I like Golden Corral myself, but nevertheless, that thing is gone. It's gone down. And so now your food choices have changed. Various ones, are having difficult times, floating, staying alive. And we still don't know, what's going to happen now. And this is just the restaurant industry. We have other industries that are in trouble. But in San Francisco, 50%, only 50%. We've got, and I think it was New York. I think it was NBC News reported that it was like 1 in 5 businesses, 20% of businesses has closed in New York. About 50% or 20% of businesses are closed. Then you have business debt is at all-time highs. So what I'm saying is it your dollars now? COVID-19 has done a job. Your dollars now in supporting businesses that can be supported, including insurance and financial firms such as ourselves, is vitally important. And because we have the services to meet the need, and we'll talk about that here in a second. So I wanted to go into that, but COVID-19 is the killer. It is slowed down everything, has hampered everything. There's some of our individuals now. We know quite a few people who have been sick with COVID, and thank God that most everybody I know anyway has recovered or is in the recovery process from COVID. So they say that the recovery rate is 98, 99%, and that's a good thing. But we are certainly praying for and sorry for those individuals who have lost their lives, because have been quite a few people that have lost their lives as a result of COVID-19. But nevertheless, these are vitally important things. Now, let's deal with some of the in-depth portions of the particular program here today. And again, if you're tuning in, if you have any particular questions, go ahead and place your questions in the comments. In fact, let me write that out there. Just in case you have any. We'll go ahead and read those questions as they come in. And most importantly, we'll answer those questions. All right. Now, life insurance. One thing I wanted to get those of you who are tuning in or who will tune into this particular broadcast, I want to get you to view or examine is your life insurance, and to take an evaluation of your life insurance during these times. One thing that we've been able to do quite successfully, and I guess I want to say little to me knowing it or being aware, we ran across some services that we began to offer last year and slightly year before that really came out to be very valuable to clients now that COVID-19 has hit. And I'll discuss the types of insurance here real briefly. There's two types, term and whole life insurance. Both of them will pay out. But term insurance lasts for a particular period of time, like 10 years, 20 years, 30 years in some cases. We've got one that even goes up to 40 years. But term insurance lasts for a certain length of time, then it expires. And unless you buy a rider that gives you your money back, term insurance is like your auto insurance. At the end of the day, they just say thank you. Now we've got some auto insurers that are, trying to give money back and stuff like that. That's because they're overcharging you anyway. But nevertheless, they say bash. Okay, somebody's throwing a stone. But nevertheless, this is how insurance works. There's it's a temporary type thing. It only covers a particular period or time certain, and then at the end of that, there's nothing back. That's term insurance. Whereas permanent or whole life insurance, which there's much bad advice out there regarding this subject, because you got some people that are extremists. They don't buy any whole life insurance. It's all bad, and that's a lie. That's the biggest and most irresponsible claim that can be found in the financial services industry. Let me say one of the biggest. But nevertheless, whole life insurance builds value. It becomes a permanent fixture at some point under most whole life scenarios, that it may come a point where a person does not have to pay for it and the coverage exists. So they don't have to continue to pay premiums out of pocket, but the coverage exists. The policy basically pays for itself based on the internal or accumulated values. And so that's the best case scenario of whole life insurance, that you'll purchase a particular policy, and at some particular point that thing will build up, and maybe you don't have to pay for it anymore, or if you do pay for it, it'll continue to build in cash, and the money that's built up in there, you can take that as an advance against the face amount. You can take that and use that for whatever purpose that you want without restriction. So that is the quick difference between term and whole life. One builds up value and the other one does not. Both of them cover whatever the need is. So you don't have to worry about the financial need not being met at the time of death. Okay. However, the most modern insurance is built with a couple of different caveats that did not exist previously attached to the life insurance. And that is called a chronic and critical illness riders. Okay. Now, let me explain the difference between a chronic and critical illness. A chronic illness generally is evaluated based on what's called the activities of daily living. There are about 6 or 7 activities of daily living, depending upon who you talk to. Eating, bathing, transferring, dressing, there's a few others, but those are the main ones off the top of my head right now. Those chronic illnesses, when a person cannot perform, under most scenarios, 2 or more of those things, they're considered to be chronically ill. Okay. So that is a chronic illness. Critical illness is heart attack, stroke, renal failure, maybe being paralyzed, things like that. These are critical illness. These critical illnesses are subject to affect your lifespan and the quality of your life. So there's a stroke that really takes years off of your life. You're still living, but now you need help. You may become chronically ill just based off any one of those things. But nevertheless, Those are critical illnesses. Now, it used to be that you'd have to purchase a insurance to cover that. And most of the time, either one of those things, and most of the time, the insurance was not available for that until you were older. And that's where we get into what's called long-term care insurance. Now, long-term care was actually insurance that actually, was a use it or lose it. You had to use that, and if you didn't, it was like the car insurance. Thank you, see you later. If you didn't use it, and it was very expensive. And in fact, the original series of long-term care policies, they gave all these guarantees. You're going to have this, and the premium is going to be affordable. But then when people started using them, and those actuarial numbers were actually double what they thought, and the claims exceeded what some of the predictions were, they had to raise rates around the country. Every company, some companies could not afford it. They couldn't stand it. They went out of business. So this was a problem. Their projections, their mathematicians, their chaoticians, the chaos people, they didn't do well enough in evaluating the costs. And so those costs shot through the roof. And pretty soon long-term care became one of those propositions where you've gone too far into it and you need it so that you can't drop it, but it's where it is, you can't afford to keep it either. So you can't drop it, you can't afford to keep it. And so it became a very difficult proposition to look at long-term care insurance. And no matter what company, no matter what you looked at, is just difficult. Long-term care was a problem. So quite naturally, the next generation or the next development of life insurance said, hey, well, what if we include, we've got a pot of money sitting there. Somebody purchases policy for $500,000. Long-term care insurance is just about buying a pot of money for a certain rate. And so the company said, well, what if we used the life insurance the same way? And what if we gave clients access to the life insurance if they were critically or chronically ill? And we, of course, could verify that through medical professionals that their life is affected because of these illnesses. We could very well provide and help individuals to keep them from going and selling everything under the sun, because this is what happens when people get chronically and critically ill. They're looking for cash dollars, and to help families have some financial continuity. Companies began to think, well, we can sell individual policies, but then at the same time, well, why can't we include this type of coverage within the life insurance itself? So here we have a $500,000 policy. A person gets chronically or critically ill. The doctor verifies that their lifespan and lifestyle is certainly affected as a result of this, and that family has a big insurance policy but no coverage. How can we solve that problem? And I guarantee that probably about, I would say 80 to 90% of you may have policies that are good. And you'll tell me, you said, oh, I've already got a life insurance policy. But does your life insurance policy provide coverage in case you are chronically or critically ill? Is there a way that your family is secured? Remember, we're talking about protecting and securing, right? Is your family protected or secured against a chronic or critical illness without you having to go out and sell the farm or fire sale everything in your house just so you can have enough money to provide a person to come in and care for you. You don't have long-term care insurance. And just in case you didn't know, this is vitally important because critical illness and chronic illness is on the rise, and it especially is on the rise within the Black community. Okay? I don't, want to target. I sell to everybody. I don't want to target or single out anyone, but this is just the numbers. You read the CDC reports, you will find out that chronic and critical illness incident, stroke, is on the increase among Blacks and minorities more than any other group within the United States. So we are suffering these type of events, and these are life-changing events in many cases. And so the first thing, no matter what level or status families are at so far as economically and financially, the first thing people are looking for is where is the money going to come from? And if you're dependent upon the state, have you looked right now at the state's responses to COVID-19? Are you really considering that the state is going to take care of you? Are you really convinced that the state is going to do that? And I tell you what, we can talk economic stimulus all we want, and I'm waiting for another stimulus check. But we can talk economic stimulus all we want to talk. But are we convinced that the government has enough money to take care of us as an individual on a long-term or an ongoing basis if we were to get sick? So incidents of stroke, chronic and critical illness not only are increasing, but they're increasing at lower ages. People are having to live longer with a chronic and critical illness and condition than before. In a COVID-19 era, it's even worse. Because COVID-19, some doctors are beginning to examine what residual effects of COVID-19 that there are. Myocarditis is one of the things that came along early, and I think it was, really kind of overstated, but that remains to be seen. But myocarditis, for those, who study medical professionals, you study medical terms, you hear the carditis, you know that this is dealing with the it's dealing with the heart, inflammation of the heart, myocarditis. I won't get into medical terms, but nevertheless, what's going on there. But this is one of the things. And so heart issues, heart attacks, strokes, renal failures are something that's happening as a result of COVID-19 when it comes. Now, is COVID-19 a chronic or critical illness? No, it's a virus, it's a disease or a sickness or an illness. But what it leaves could be a chronic or critical illness, and for insurance purposes, that would be covered. So recently, and like I said, I began to deal with this reluctantly because I ran across a few different companies, and we looked at these type of things as we were recommending life insurance services to some of our clients. And I'd always pick out the swath of companies that are the very lowest price in the country. And I pick out some others that have some other features, and we kind of do a price offset. And we look, for these few dollars, it's worth it to have this because this is an extra built in here. So for those few dollars, don't miss that. And one of the things that I find was included in this particular plan that I have through one of my top carriers that's been in business over 100 years, 125 years or so, was a chronic and critical illness rider built in to certain types of insurance. So I began to offer that, and I was offering it and not really knowing that I was preparing clients for any side effects or any residual effects of this COVID-19 disease. And so we have a swath of clients, a great deal of clients through Dunamis that have chronic and critical illness benefits built into their life insurance. Many of them bought policies $250,000 and up, some even up to $1 million, some up to $1.5 million. And guess what? Chronic and critical illness benefits will cover individuals not only for their life if they die, but if there is a chronic or critical illness event, they are covered even up to $2 million. That is the, policy limitation, certainly up to what their policy face amount is. But between X amount on the low end and X amount on the high end, 2 million on the high end, these families and individuals were covered. And I began to share that news with many of my clients the other day, as I've had a couple of them that have COVID-19, and they found peace of mind in knowing that when they are finished with this disease, the Lord blessed them to go through. If there's any residual effects to where their life is shortened or something happens, they have a stroke, heart attack that requires ongoing servicing, or they lose the activities of their limbs, the daily activities become cumbersome, and they need help and assistance, there is money built in their life insurance for them to tap into. That's the power of Dunamis Insurance and Business Services. And that's why each one of you viewing this should call me, because not everybody is situated for this type of coverage, but there are many that are. Many of you have policies that have what's called a terminal illness rider built in. That's if you're given 24 months or less to live by a medical professional, that you can get your needs met, or you can tap into the policy face amount up to a certain percentage. Normally it's about 80% of the policy you can get in advance. That means that if you have a $100,000 policy, you're diagnosed as having 12 to 24 months or less to live, you can get up to about $80,000 to help take care of family arrangements, do things that you need, maybe even purchase experimental drugs or get experimental medical care to help affect your condition, things that your health insurance won't pay for. And so that's built in. But having a life insurance policy that covers you with death, covers your terminal illness, provides money in case there is a terminal illness, also covers a chronic or a critical illness, is a fortress of protection built in a life insurance plan that you need. Where you can get that from? You can get it from Dunamis Insurance and Business Services by calling 309-648-5351 or emailing us at Dunamis1. And I'm going to put this in the comments. Dunamis1 at netzero.com. Okay? That's what you can do. You can email us there for your own quote. You can call us at 309-648-5351. Got that in the comment too. Ooh, well, wait a minute. That didn't go through. 648-5351. There we go. You can call us or you can email us. Well, let me get that right. 309-648-5351. Okay. The former number, delete that former number. You got the new number in there right now. 309-648-5351. And so that particular benefit comes in handy because it's wrapped up in your life insurance premium. And if you're going to pay a life insurance premium, you're going to cover your family and protect them, and think well enough about the survivors in your family that you love, is worth having that benefit on your insurance. It's more than worth having it, because you will not only protect them in your absence, in your death, but you will also protect them in case the worst possible scenario arises and you become chronically ill, and are not able to perform or to do some of the things that you would like to do, and or critically ill, to where now you've got cancer and your lifespan is affected. You're maybe outside of the 12-24 month area, but you've got this and it's affecting your life. It's affecting how you live. Now you can look and say, hey, here's some more money that we can tap into as a resource for our family. And insurance, that's what it's about: protecting your loved ones and protecting your family. So I can't advise you strong enough: protect them. And that's and you do this when you're healthy. Now I've got some people that come to me when they're sick, and or they know that they're sick, they know that they're ill, and they want everything, all the stops pulled out. I want the best insurance ever, and that's okay. There's nothing wrong with you wanting that, but secure your insurance while you're well. Don't wait till you're sick to secure insurance, whether that's life insurance, whether that's health insurance, or any other type of insurance. Secure that insurance when you are well, not when you are sick. Okay, so a lot of you, it's about it coming to your mind. I've had more people call me, and they said, I was thinking about this, or I've called for a quote, or they call for a quote, and they're saying, I was thinking about this. I know I need to do something. What I do, I'm working so much. I'm doing this, that, and the other, and you know what? At the end of the day, as hard as you work, your job will probably acknowledge your work. Maybe if you're, I won't say I don't believe in luck, but it's the expression, if you're lucky, they'll acknowledge your work. They will say some good things about you. But at the end of the day, if you haven't done what you need to do for your family, they're not going to do it. They pay you while you're working. And then after that, that's, it's a done deal. So I would advise you to take the time, even if you have to schedule time. The hours at Dunamis are very flexible. We are flexible in our hours and in our work schedule. And I try to arrange, except for Sunday, I try to arrange my schedule to meet yours as much as I do. I try to make sure that I'm arranging my time, arranging my schedule to meet your schedule, so that we can discuss, the business that pertains to you and your family, and to get some things together. Because these are the type of things you don't want to grope around to try to find solutions when you are just back up against the wall and you need solutions. Here you are. You've had a stroke. Now you want something to cover stroke. It's not going to work. Not going to work. Let's get these things in place beforehand. And while we're talking life insurance, this is my thought. While we're talking life insurance, I'm thinking about other things, other eventualities. And as an insurance agent, I'm thinking about other eventualities that could potentially occur, and finding out how I can incorporate within this transaction and within this particular strategy that we devise to address those particular needs and areas. And so coverage for chronic illness and critical illness is very important, and something that you should consider and include in your life insurance plan. And like I said, if you purchase a policy probably before the last 3 to 4 years, your policy more than likely does not include coverage for chronic and critical illness built into the plan. And that's why you need a reevaluation. That's why you need to call me. My number's out there in the comments, 309-648-5351 or dunamis1 at netzero.com. That's why you need to be in touch with a strong, locally owned small business who's not captive to the numbers. I've had clients repeatedly tell me they call different companies and they were looking and for information, and the person gave them a rush course. They hurried up. They talk fast. They talk in terms, in insurance terms, and they get through the material, but the people don't understand what they're talking about. And so in this particular field, you have those type of things. You have some people who are, that's the track that they're on. When I was in New York Life, when I was at the Equitable, you were just a number. Clients were numbers. And if I wasn't able to get up to a certain number of dollars out of the numbers that I had, then that was, the end of the road. Every advantage that I had as an agent would be taken away, and it was evaluated every 6 months. So you had to do something. You didn't have time to kick the tires. You didn't have time to think, and I didn't have time to kick the tires with you. Did not have time to think or to help you think things through. It was either you got to go or I got to go. Either one. You got to do what's necessary, or, that's just the end of the road. And so this is the way it is many places. This is why Dunamis exists, because at Dunamis, you are not a number. You are a person. You are an individual, and you have the best resources that we have, whether those resources make us money or not. And I don't want to, paint the picture that I'm trying to be a mercenary or, out here, just trying to make money on every turn. Certainly not. But I'm not trying to be a I'm not trying to be a martyr, just not making anything and kill myself. But I'm not a mercenary either. That's what I was intending to say. I'm not a martyr nor a mercenary. Just trying to help every individual one-on-one the best that we can. And we offer these services. So that's it. So life insurance. If you haven't had a life insurance evaluation, or if your policy is more than a few years old, you need to get a reevaluation. And I would say do that while you are healthy, and be willing to move forward once you've found the solution. Once you see the light, walk into the light, step into the light. Believe me, the light will not hurt you. And so call us. We will evaluate what you have. I can't tell you how many thousands of dollars that we've been able to help clients secure from their old life insurance over the years. Did a seminar some years back, and I was talking about old policies. A guy went back, one of the gentlemen went back, and he pulled out a crate full of old policies that his family had bought and purchased years ago, and we started going through those policies. And that fella had about $3,000 sitting in a box, basically, that he wasn't going to look through for anything. He had over $3,000 sitting there, and he went back and was able to file claims and get money from those old policies. So sometimes that's what you need. You need that type of evaluation. Now, when that happens, unless I've got to do extensive research, believe me, my time is valuable as well. Unless I've got to do extensive research, though, I don't generally charge a fee to help you evaluate your position on those type of things. But if you're blessed, keep a brother in mind. Keep Dunamis in mind. We're glad to help out, but keep us in mind, okay? So these are the type of things that happen, and those things are out there. So life insurance, if you haven't had an evaluation, some of you don't know, How do we come up with the insurance amount? One of the things, do not do, for God help us, for whatever reason. We've got some bad advice, and I know it's well intentioned, that when you buy these cars and you buy these houses, you intend, well, if I die, I want, my wife to have this, or my significant other to have that. And we want to make sure the house is paid off in the event of death. So we try to get a loan on the home, or include the insurance and the mortgage and all that. Do not do that, please. Don't do it. Horrible strategy. You just got extra money you love to give away if you're doing that type of thing. The worst strategy, let me say it like this. There could be a situation where that's acceptable. And that's, you're dealing with the right age and the extreme bad health of an individual, that you can't purchase enough individual coverage on your own. And if insurance is available on that loan, it is prudent at that particular point, but you need evaluation of that, because the way insurance companies are doing right now, we're able to get many conditions underwritten, able to get many conditions covered that some 20 years ago would be an automatic decline. I'm able to get people insurance coverage, life insurance coverage, who are living with HIV. When HIV first arose, it was an automatic decline. There was no company in the world that would take an individual with HIV and or AIDS. I'm able to get individuals underwritten with life insurance. And I'm not talking about $5,000 or $10,000 worth of life insurance, which used to be some of the maximums. I'm talking about significant dollars, 100, 200,000, even up to millions of dollars worth of insurance for people who are living with HIV. Very important. You don't hear that at very many companies. You don't hear that. They don't talk about it. But I talk about it because it is a reality. And many of that depends because the modern advancements of medicine, many people now can live a full life, longevity wise, with HIV that could not do this some years ago. And the modern companies, the best companies in the country, are looking at the actuarial data and science behind it, and they're basing their underwriting determinations and decisions based on viral loads, history, level of infection and condition, and all of that type of thing. And they are insuring individuals. Not every company is doing it. This is why you need to have the Dunamis difference, or the exposure of Dunamis Insurance and Business Services. That's why you need to know us, because we're able to insure those what's called hard to insure cases. Now, if your medical records are jacked up, that's another thing that needs to be fixed, because medical information is vitally important. And so fix your medical information. You don't want people out there, doctors that have your medical file messed up and jacked up, because that can hold up your insurability and your ability to secure an insurance plan for your family. And I've got a couple of clients right now that we've been dealing with that particular issue for almost, way too long now. And the same ones that got your medical records jacked up, they wouldn't have their medical records jacked up. Believe that. They've got insurance in place for their families, but they're jacking around with your medical records and putting things in disarray and not providing the information that's asked for. And so you've got to force the hand. And so as an agent, that's part of what I do as well, is we kind of push some of these providers and these medical professionals to give full, thorough, and accurate information regarding a particular situation. So those things are vitally important. But if you have not had an evaluation on life insurance, or have not updated your policy within the last 3 to 4 years, or looked at the options available on a new style of policy. Some of you have term insurance policies and you're proud of the fact, oh, we got this good rate, a few years ago, and look at this, and we know that we're at a good rate and we're at a good deal. But what about the benefits? You may have a good rate, but you're healthy. You say yes. Well, do you have a chronic, critical, and terminal illness benefit built into that insurance? And does that, if not, you're going to have to go back at some particular point and address those particular needs, in addition to the good rate that you have on your term insurance or your life insurance program. Let Dunamis build that into your current program for you. Let us take the load off and the stress off of your family. Many of us are talking about minors, and some people say, well, should I have insurance on a minor? And then you have some people that, no, you don't need insurance on minors. Well, unless you have enough money laying around to pay funerals, which costs the same in many respects for minors as it does for adults. Unless you have that money laying around, put insurance on your minors. It's just backwards for you not to have it. Because it only costs such a little bit of money. So put some insurance on your minors, or put some insurance on those who are little, and you can attach that. If you're a parent, you can attach that to your life insurance program for little or nothing. And now there are some companies that's recognizing that the mode of the traditional family has changed. And so they are allowing grandparents to attach grandchild riders onto their life insurance. So if you're a grandparent and you want to make sure that your grandchild, grandson or granddaughter is covered, maybe because, God forbid, maybe you want to give them a gift. Maybe you want to give the mother a gift and want to make sure your grandchild is protected as well. Or maybe because the parent is irresponsible. Now you can get a grandchild rider on life insurance through certain companies. And they will insure that particular situation. And whereas before, in the old days, and like I said, up until recent times, that's unheard of. If you were not a parent, the only way that you could get insurance is by having a guardianship or some type of formalized arrangement, and that had to be submitted with the application. And, that's basically the only way it can be done. That has changed. And you wouldn't know it if you're working or dealing with a traditional life insurance agency or company, and one that deals with traditional policies, purchased the traditional way. You're not going to find that at some of the majors that you see these advertisements on TV. You're not going to find these type of opportunities there, but you will find them at Dunamis Insurance and Business Services. And we are prepared to serve you and your family. So those are options there that are available to you as well. Now, on from the life insurance area. And one of the things real quickly, and I talked about that before, I think I kind of cut myself off talking about putting your life insurance on the loan. Don't do that. Don't do that. Home loan or auto loan, whatever. Do not do that. You're going to pay for the duration of that loan. That percentage of whatever the premium is attached to the loan. And so you're going to pay the percentage, you're going to pay interest on an insurance premium payment. Now, insurance premiums, let me say this, are already high enough, no matter how low they go. I don't think there's anybody out there to say, hey, I want to pay more for my insurance. I don't think none of you will say that. Well, by virtue of attaching your life insurance to a home mortgage loan, or life insurance on a car loan, you are paying more for your insurance. And not only that, it's the worst type because it's what's called decreasing insurance. As you pay the loan off, you may have started with a $10,000 loan, but as you make every payment, once you get out of the interest phase, it's going to go down and down, right? It continues to go down every month. Well, you're paying the same amount of insurance policies, a premium, every payment that the coverage goes down. Now, what kind of deal is that? Not only are you paying it for the duration of the loan, but you're paying the same amount for decreasing coverage. That's called decreasing term insurance, and it's just a bad, horrible financial mistake. If you're looking to maximize dollars and you don't have an illness or sickness and you're, rightly situated, you are way better off, much better ahead to pay for your life insurance separately from your auto and your home loan. In fact, what you do is you get a policy that has a consideration for your home payoff and your automobile or various types of loan payoffs, your debt ceiling, if you will. You consider what total amount of debt is, and you place that in your insurance policy along with providing for funeral services, final expenses, different things like that. So categories of developing an insurance plan considers, number one, your total debt. How much would it take to pay you out of debt? That's one of the top areas. Number two, so your debt. Number two, so what you want to do, you want to consider one, total debt. So that's one of the first things that you do. You look at what the debt is. You provide for that. Home and loans, for auto, everything. Okay, so that's one consideration. Second thing is that you want to consider. You want to consider your income replacement, or let's do it like this first. Let's do gifts and inheritances. Yeah, you want to consider that may be a part of what you want to consider for someone. Okay, hold on. Gifts and inheritances. Okay, then that's actually a latter consideration, because the next thing probably is more important, and that's income replacement. If you've been making, it depends upon your considerations are small kids versus grown kids. That's one of the considerations there. Percentage of replacement, joint incomes. You look at how much money that you make together, and you consider that you have a joint income. And if you have smaller kids, at that particular point, you want to replace more of your income. Okay, you're going to have offsets like Social Security under most circumstances. But Social Security, remember, it comes monthly. There is no lump sum associated with Social Security under normal circumstances. So that may be a good monthly expenditure, a way to meet a monthly expense for a surviving spouse with kids. But that may not be adequate enough to provide any immediate funds or add up to the total of replacement. You got younger kids, you want to replace up to about 80%. Let me see. 80% of income. What we're talking about doing is developing a plan here, and it's going into the comments as we speak here. So you're wanting to replace about 80% of income. When you've got older families, maybe you replace 65%. Maybe you only replace 65% of income at that particular point, because maybe there's less expenses, but it's not a hard and fast rule, because you could be an older family and just getting a mortgage. And so your expenses could be higher, and you could need a greater income replacement factor there. How you purchase it is another consideration. How you purchased is a consideration, because if you purchase on your own, if you have permanent insurance, the values within that permanent insurance can be used to calculate against you as it pertains to receiving certain social services and benefits, such as state-sponsored Medicaid. Medicaid offers a spin down, and that spin down keeps you poor. Is designed to make sure and to keep you poor. And most Medicaid criteria is $2,000 gross assets of certain types assets, and when I say that, I'm talking about cash. $2,000 cash. So they want you to have less than that. Then there's certain credits, and certain credits for houses and cars. But for the most part, they want to make sure that you are that you're poor before Medicaid will help. So until you reach that particular place where the state actually comes in, under most circumstances, you're on your own, paying out your own dollars. And I'm talking about at any age. This is not just for older people. This is for any age. These are considerations that happen at any and every age. So we've got to look at that, and this is why you need careful and thoughtful financial advice, and you need careful and thoughtful consideration with a financial professional who will take you through this process of evaluating, what you need. Sometimes you come. I've got many of my clients, no matter what, they come in with their idea. This is how much they want, and that's it. That's fine with me. That's how you want to play. That's how you swim. That's fine with me. I don't care whether you backstroke, side stroke, breaststroke, whatever it is, however you want to get there. Okay, whether you run, walk, crawl, just as long as we get there and address that need or address that issue, that's fine with me. So if you have the amount there, I can only tell you or advise you on some of the considerations to include. Also, you include your final expenses, such as funeral and graveside services and tombstone services. You want to consider that those type of things there as well, in building um, your insurance or financial package. Also, bills and other debt, loans, medical bills, etc., etc. You want to consider all of those things when you're building your family's financial picture and developing a proper and appropriate life insurance plan. You got to consider all of those things. So income replacement, cancellation of debt, and all of those type of things. I've had too many people tell me I don't want him better off than we are now, or want her better off than we are now. Listen, those are your conversations. You have those conversations, and I appreciate and respect your decisions on how you decide to handle those things within the context of your family. But the bottom line is, I can only tell you based on my professional experience what are the considerations, and you pick those things apart and you do what you do, because guess what? Freedom is a beautiful thing. And America is built on freedom, and in insurance and financial purchases, freedom is an element that cannot be overlooked. So that's a blessing, and something that you can consider there. So that's how to build a life insurance plan, or to get to an amount, because I've received a lot of questions. Say, well, how do I know how much do I need? And so those are some of the considerations. And at Dunamis, we will work with you to kind of evaluate and develop a plan, and make sure that you're up to speed and everything is going straight, everything is right with you, and tell you how to get a plan together. So you can call us at 648-5351, or you can email us at dunamis1@netzero.com, and we'll give you information the best that we can as to how to put these things together and get a plan that's meaningful, that will be pertinent to your need, that will meet the need that you have as you move forward. That's what we do at Dunamis. Okay, that's the life insurance segment, and we're out. So we dealt with the social responsibility part at the beginning of this video. We've dealt with the life insurance part there, and we're coming up on an hour and a half being out here, and I'm taking my time with this, and we're going to cut off here real shortly. But nevertheless, another part that we want to look at, and something that's just is important. And I know you've seen the commercial, the Aflac duck. Everything goes on Aflac, and all that. You got the duck out there. And what Aflac has successfully done is raised the awareness of the fact that you can get sick, you can be out of work, and you can have your medical bills paid and all of that type of thing. You can have these various types of things happening. But you know what? You can be cash poor. Nobody's paying nobody's paying you. You don't have enough money to live off of. And so Aflac has been very successful in showing this is exactly what's happening. And this is how families are sometimes becoming bankrupt because of certain things like this that go on. They get sick and ill, and they can't afford to live. Everybody else is paid around them, but they can't afford to live. This is called disability insurance, replacing income due to the inability to work in one's own occupation, and replacement of income, due to sickness, illness, accident, whatever the case. And it's vitally important that you make some considerations within your financial plan for disability insurance. In fact, at most ages, and in many ages, the rates of disability that last for 90 days or longer are higher than the percentage or the rate for death, where there's only a 1 in 7 chance of death at just about any age. There's a 50-50 probability that people during their working age years, up to age about 65, will experience a disabling event that lasts 90 days or more. Thus, just the percentages. So it becomes important to address that issue and those particular levels and those numbers, because disability could occur at a greater rate and greater chance and have a greater living impact on the individual and family than just about any other financial occurrence. And so it's important to be able to replace that lost income. And one of the first stops that I tell people to do is to make sure that they understand their long-term and potential short-term and their long-term disability insurance at work. If you're fortunate enough to have an employer who has purchased your short-term and long-term disability. Now, most companies don't purchase this anymore, and then most companies, they have a shorter duration of time. The short-term disability only lasts for like 6 months, and then after that, a person is on their own. So it's important to understand how to develop and how to put together a disability insurance program and have professional options for individuals. Dunamis has a strong network of the country's top disability insurers for just about any occupation, whether you're a blue collar worker, whether you're a white collar worker. We have programs that are designed for specific workforces. And, thank God the duck is not the only one in the water that's swimming. We have some companies that are able to provide some powerful packages of disability insurance. A couple of the benefits that a couple of the things that you'll be that you'll want to make sure this in there, terminology that you'll need to know. You need to know the definition of disability, which is very important. Every particular policy has a definition of disability. You need to know the own occupation clauses. Is it you're considered disabled if you can't perform your job, or considered disabled if you can't perform any job like what you have? Or a third one, are you disabled if you can't perform any job? Those are very important distinctions. Those are 3 different distinctions. If you can't perform your job, any job like your job, or any job, period, you need to know. And you need a financial professional. That's why we're here. Dunamis is the financial professional to help you understand these very important terms and definitions regarding disability insurance. You need to know those terms of disability. You can write that. The own occupation clause. And then you need to know 3, the duration of the occupation. You need to know whether it's a 2-year, 5-year, or more. You need to know, if let's say that you are a brain surgeon. Let's say that you're a brain surgeon and you have a own occupation clause that says this lasts for 2 years. If you cannot do brain surgery, you're disabled and you cannot do brain surgery. Your hands are shaking as a result of some illness or something that has come upon you, something that's happened, or you just cannot perform, you can't stand, you can't do whatever, and you're disabled. They consider you disabled for how long in that occupation? 2 years? That means after 2 years, they may be expecting you to get any job for which your training and education says that you can work. Even if it's not brain surgery. Some say 5 years. Some say if you cannot do this for 5 years, you're covered. Some, it may be permanent. If you cannot do this ever again, then you're covered. Those are dramatically different clauses within each particular policy, and you need to know the definition of your own occupation insurance or clauses on your disability insurance. Dunamis can help you with that because we have the carriers. We know who's doing what, and believe me, they're not changing from Maine to Los Angeles. The companies are the same. We know exactly who's in the market, who's dealing with what, and who's doing what. We know it. You can get that right here in Central Illinois. So those are vitally important things. Those are things that you need to know. Also, you need to know the benefit waiting period. Sometimes they're 30, 60, 90, or 180 days. You need to know. Now that's how long that it takes for you to receive benefits. That's, before benefits will start. How long does it take? Within, you have to wait 30 days and then you start receiving benefits paid out to you. So the actual clock, so far as benefits, the first 30 days you write off, they start covering you in your second 30-day period. So you can expect a check around the 60th day of disability. When we're advising clients, we always advise them to have what's called an emergency fund in place. That can be 6 to 12 months of income. I like to say gross income. Many people just say net. But your emergency fund is an element of disability insurance because your emergency fund is going to help keep the boat floating until your disability insurance kicks in. So you want to make sure that you have adequate savings in your emergency fund, and you have a fund earmarked at some particular point just for emergencies. I know it's difficult. I know it's hard. Believe me, I know. It's difficult, and you've got a lot of people that, that just can't do it because we're living right now from paycheck to paycheck. And especially during times of COVID-19, we are living on the edge of our seats. We're waiting for stimulus checks, like I said, right now. They say, oh, we're going to send you a stimulus. We're going to do this. I say, do it already. Thank God for the one that they sent out. But, we've got a lot of situations that are changing right now before our eyes. And so it's a very difficult time. But some of those emergency funds actually have helped people survive even through these times. Life insurance has been a very good source of emergency funds during these times. I know many people that were able to tap into their life insurance cash values, that same cash values that those people told you not to purchase. You know, those unscrupulous charlatans told you that whole life was bad and don't purchase it. Well, some of that whole life has helped people weather this financial storm of COVID-19 and also the recession that has happened before that. And by the way, my speculation is we can expect another recession. You can attach that to the first part of this particular broadcast today when we were talking about investing with social responsibility and diversification. If there's ever a time for you to diversify, it's now, because I really predict that we're going to hit another recession here. My words. But nevertheless, let's see. I hope the best. Let's prepare for the worst and hope the best. Okay, but nevertheless, those emergency funds become a valuable part of this. So your disability insurance kind of coordinates. You can coordinate this with your emergency funds. Make sure you have enough emergency funds to last you until the disability kicks in. The disability insurance payments, you need to know, are tax-free payments. If you have disability insurance and those benefits or payments have to start being paid, those are tax-free payments to you. They are reduced, however. It's not like you're receiving full gross income or full even net income. You're not receiving that. But you are receiving a percentage, normally about 60%, 65%. But you're not paying any taxes on that. That's tax-free income under most circumstances. Again, we are not tax advisors, just like we are not lawyers. However, as a general rule of thumb and practice, you can't work these occupations without generally knowing what's going on and setting that information forth. So under most circumstances and situations, these particular benefits are tax-free. Okay. So income replacement is a quintessential part of any plan. In fact, many advisors address that area before they address any others, because everything else fails. If there's no money, what else can you do? How can you invest when there's no money? How can you save for anything, retirement or whatever, when there's no money coming in? So you need to safeguard your money, and you need to think of yourself as, you know, and we often say this phrase, money doesn't grow on trees. It doesn't, but it grows on you as you go to work. You are the money tree. And you need to think of yourself as that money tree for your family. And you need to ensure that ability that some of that money will continue to come in no matter what happens, sink, swim, or otherwise, that you will continue to have money that comes in that benefits your family in case of the worst possible scenarios. Okay? So disability insurance is vitally important in that. And so that's something that you cannot go without. Your benefit period, I talked about the way is your benefit period. That's how long will benefits that's your benefit period. Let me see. Yeah, I got that in there. How long will your benefits be paid to you? Benefit period. You know, how long will you receive those funds? Some 5 years, 10 years, some to age 65. It just depends. You can play the numbers. You can play the averages. You know, at any given age, there's actuarial data that exists that tells at any given age in your particular occupation what the chances are of you being disabled. Okay? What the chances are based on national averages, and also what the average length of those disabilities are. Your case may be unique. It may not ever happen to you. But then again, it may happen to someone, and it may surpass the numbers. Whereas some people are only disabled for 1 year. Some people may be at that age and that occupation, whatever, disabled lifetime permanently. You just don't know. You can play the averages, or you can play a thing until retirement age, 65, 67, whatever. It just depends upon what strategy that you're comfortable addressing. But let me tell you what, addressing it at any level, whether it's playing the averages, whether it's going for lifetime, whether it's undershooting and saying, well, I'm going to cover this, but I'm not going to go out to the average. I need to conserve money. Listen, even addressing it from that standpoint, you've done way better than not addressing it at all. 100% better. Because if these benefits have to be paid out at all, you're well ahead. If they have to be paid out to any degree, you are well ahead of whatever needs to be done. You are much better off. So look at disability insurance. Look at that and consider that as a viable part of your overall plan. Annuities. And we talked about socially responsible investing at the beginning. One of the main people, this is real interesting, up until a certain amount of years ago, this guy named Ken Fisher, he comes on TV, he says, I hate annuities, I'll never have annuities, he wrote this book against annuities. You know what? He was one of the main investment holders of a company that all they did was sell annuities. He was one of the main shareholders in there. You know why? Because these companies that do annuities are financially solid. The ones who really do this are strong, they're safe, and annuities do not offer upfront fees to customers and clients. Now, I know you got all kinds of little stuff around. Some people, they try to evaluate and they say, oh, well, that's a bad deal. Annuities, this, that, and the other. Let me tell you what, an annuity is a solid part of anyone's financial plan. It offers guaranteed growth, guaranteed and secure investment of dollars. It offers either fixed rates or the ones that we offer are rates that are attached to the market index, primarily the S&P 500 market index. Now, let me tell you something about this index. I believe my numbers are accurate, and if you can fact check this if you want, but this year, the index, the S&P 500, has been it dropped. It went down 20% this year, okay, because of COVID-19. Went down over 20%. But you know what? That thing has rebounded and is going up, over 10% now. And it's expected to end the year higher than it started the year, even though it went down over 20%. Now, we have what's called fixed index annuities that are attached to that particular index. And what this means is that at the beginning of the year, there was a certain number assigned to these index accounts that said, if it goes up from there, okay, you're going to make money based on a certain percentage and calculations, which I won't go into here. But if it goes down, guess what happens? You don't lose any money. You stay right where you are. Okay? But there's a little caveat. There's a little feature. When it goes down, what this thing does is it resets at the down side. So the number that it starts with, if it goes down, there's a little reset factor there. So it resets at that low number. It depends upon what type that you have. Okay? And there's all kinds of options. Like I said, this is something that you'll need to call my office for. I've got the number out there, and we can discuss plans and how these things are calculated. But nevertheless, it'll reset at the downlink. But when it goes, and so When it resets it down, you haven't lost a dollar. So let's say you had $100,000 in there and the thing went all the way down. Under most investments and under anything that Fisher would offer, if you have $100,000 in and you lose 20% in investments, you effectively have $80,000 in your account. And so now you're earning interest, whatever, when the market goes up or equity goes up, you're earning off of that $80,000 and all that type of stuff. Okay. But in this particular case, when you start off with a fixed index annuity, you have 100,000, the S&P 500 goes down 20%, you still have 100,000. You haven't lost a dime. Just that 100,000 resets now at the lowest number, which is the index number. And then when index starts to go up, and so let me show you what happened. The S&P 500 lost 20% and it's up 10%. That means it was a 30% swing from its low point. Went down 20 and came up, and now it's up over 10 from where it was to start with. That's a 30% swing from the lowest number. Every client that I have in index annuities have made money this year, not based on the 10% growth, but if they're situated on the right average, which most of mine are, they have made money based on the 30% swing from the low point to the high. Oh my goodness. It is very important that you understand that difference. Annuities are a sound part of anyone's financial portfolio. And if anybody is advising you otherwise, you need to get up out of that office, call me at Dunamis at 309-648-5351 so we can get your investment dollars to work for you, and you can take advantage of what's going on now and receive the security and the confidence that the money that you worked hard to earn will be there. Anything that's going up 30%, you can participate in the gain that's happened without any of the downside risks. Sorry, that's just the way it is. These people talking, I almost said something. These people talking all this other stuff, they don't know what they're talking about. I decided to stick with my strategy. Well, stick with your strategy while we actually get serious about making money and helping people secure their money long term. Not to mention the other benefits that we bring to the community. Listen, I'm winding down my time here. Most of my viewers will see this recorded. And once you've seen this, now I know insurance, nobody's excited to get up in the morning and talk about insurance. Believe that, in financial services, and many of us already think we've got stuff together until there's a need or until something comes up and we realize that we don't. But that's okay. That's what we deal with. But those of you who are watching this, and if you're able to get through this particular broadcast, and I've said something that you that has perked your ear and has given you cause for question and concern, you need to call me right away. 309-648-5351 or email me at dunamis1@netzero.com. That's dunamis1@netzero.com. And we can give you advice in these particular areas of information. Don't forget, get your will together. Start planning a will. Take a look at your estate. Some of you have minor children. You need to know who's going to be the guardian of your children. Believe me, it's not a blessing for your family to take your 3 or 4 kids. And it's not a blessing for you to just dump those 3 or 4 kids on your family without providing financially for them or having a defined financial plan set up for them. That's nothing in that You're not providing a blessing to anybody doing those type of things. Um, Set your financial house in order. Get things set up so that your children, your family will be better off if something happens than they will be, otherwise. And there's a few things that you can do, and it begins with a call to Dunamis Insurance and Insurance and Business Services. Listen, I'm talking to Dunamis Insurance and Business Services at 309-648-5351. That's 648 or 309-648-5351. Dunamis Insurance and Business Services. At Dunamis1@netzero.com. Listen, thank you for being with us today. I really appreciate this time that you've taken to go out here and consider these very valuable financial considerations. This is Harvey Burnett, and I'm signing off for today. God bless you. Happy holidays, Merry Christmas, and a Happy New Year. If I don't talk to you, hopefully we'll talk to you before all of that. God bless, and we'll talk to you soon.